Hey there, if you've ever stared at a trading chart and just felt completely lost, you are definitely in the right place. Today, we're cutting through all the noise to focus on one single, incredibly powerful tool that the pros really use to figure out where the market is actually going. Let's jump in. I know, that's a pretty bold statement, right? But it gets at a really common trap. So many traders think that adding more and more indicators will somehow give them a magic edge. But honestly, the opposite is usually true. The real secret isn't more complexity, it's finding simplicity that works. Okay, so let's kick things off with a problem that I'm willing to bet a lot of you have faced. Just plain indicator overload. It's that feeling when you look at your screen and it's just chaos. You know the feeling, right? Your charts are just a mess of lines, oscillators, bands. It's like you're trying to read a dozen different languages all at once. And most of the time, all those indicators do is create confusion and contradict each other. But what if there was one tool designed specifically to filter all of that out? And that, my friends, brings us to the master tool for this exact job. It's elegant, it's simple, and it's built to do one thing incredibly well: follow the trend. So what exactly is a moving average? Well, at its heart, it's just an average price, calculated over a certain number of days. Let's say the last 50. Its whole purpose is to smooth out all those wild, day-to-day price swings and show you the real underlying direction of the market. It shows you the signal, not the noise. You want a really great way to think about this? Let's use an analogy from school. One bad test score, that's just noise, right? It's a single random data point. But your average for the whole semester, that shows the real trend of your performance. A moving average does the exact same thing for a stock's price. Okay, so we get what it does. But which one should you actually be using? There are two main types, and the difference between them is actually pretty important. Honestly, the best way to think about this is the classic tortoise versus the hare. The simple moving average, or SMA, that's the tortoise. It's slow and steady because it treats every single price in its period equally. But the exponential moving average, the EMA, that's the hare. It's faster because it gives more importance to the most recent prices. And in trading, that speed is a huge advantage. So the takeaway here is super simple. If you're actively trading, you need an indicator that can keep up with what's happening right now. And that's exactly why the pros rely on the EMA. It's the tool that stays in sync with the market, and it's what we're going to use to build our system. All right, this is where it gets fun. How do we actually turn this indicator into a trading system we can use? Let's get practical and lay out some clear rules using the 50-day EMA, which is a total classic for spotting trends on daily charts. Okay, so let's walk through the rules for a buy signal, what traders call going long. Step 1, you just watch. Step 2, you patiently wait for the price to make a strong, decisive cross above that 50-day EMA line. When you see that, that's your signal. The market is telling you it's got strength, and that's your cue to jump in and ride that uptrend. And for the sell signal, well, it's the exact mirror image. It's beautiful in its simplicity. You just wait for the price to cross decisively below the 50-day EMA. That's the market telling you that momentum has shifted down. It's the signal of a potential downtrend. That's when you either sell what you own or go short, betting on the price to go down. Simple, objective, and no guesswork. Okay, that all sounds great in theory, but how does this actually play out in the real world? Because here's the secret to trend following. It's not about winning every single trade. It's about making absolutely sure your wins are way bigger than your losses. And then you get this. This is the home run, the grand slam. This is when the system latches onto a huge, powerful trend and you just ride it for a massive gain. This is the one trade you've been patiently waiting for, and it's the engine that drives the whole strategy. Of course, you'll also catch these really solid, profitable moves. You know, not every trend is going to be a home run, but the system is designed to consistently get you on base and keep adding to your profits. And then you have these, the small wins, the small losses, what we call whipsaws. These happen when the market is just chopping sideways with no clear direction. And yeah, they can be frustrating, but they are a totally normal and expected part of the game. And this right here, this is the absolute core philosophy of the whole system. Let's say you take 10 trades. Maybe 7 of them are small 2% losses and 2 are small 2% wins. You're still down, right? But then that one home run is a 30% winner. That single trade completely wipes out all your small losses and leaves you with a huge profit. That's the key. Okay, so you might be thinking, how can I filter out some of that frustrating noise in those sideways markets? That's a great question. Well, let's level up with a pro tip that adds another layer of confirmation to our signals. So let's be honest about the biggest weakness of a single moving average. When the market isn't really trending, when it's just chopping back and forth, it can give you a lot of false signals. It gets you in, then out, then in again, leading to those frustrating little losses we just talked about. The solution? It's called the crossover, and it's actually pretty simple. We just add a second, slower EMA, like a 100-day, to act as our filter. Now, a buy signal only happens when our fast 50-day line crosses above the slow 100-day line, and a sell signal only happens when the 50 crosses below the 100. This two-step check helps make sure there's real momentum before you pull the trigger. But there's always a trade-off in trading, right? So what is it here? Well, with the crossover system, you're going to get into trends a little bit later, and you'll get fewer signals overall. But, and this is a big but, the signals you do get are usually way more reliable, which can lead to a higher win rate. It's a choice between being more active or being more selective. So let's put this all together. We've seen how moving averages are absolutely fantastic trend-following tools. They confirm that a trend is happening and help you stay in it. But that leaves one really important question, doesn't it? How do you know when that trend is running out of steam? What indicator can actually warn you before the whole thing reverses? Well, that's a whole different kind of tool for a whole different job.